Hey guys, welcome back to the demo portion series of the lecture. So for your homework, you're going to do problem 17-1A and 17-7B. Now, I am not going to go over 17-1B. It is pretty much identical to what you have in the homework. The lecture videos, let's put it this way. You don't need a demo video to do this problem. You watch the lecture videos, you watch the demo videos that I did, you understand the concepts, you'll be fine, right? You're just saying, they give you a bunch of transactions, which you need to know this, right? A bunch of they give you, 8 transactions it looks like. They want to know what statement of cash flow activity is affected, meaning is it operating, investing, financing, and then you want to say, does it go up or does it go down, right? Meaning what is the effect on that statement of cash flow? So recording depreciation, well, I need to add that back, right? So that would be an inflow. Loss on disposal of equipment, right? Well, depends what we're talking about here. Right? Are we talking about, or no, we are talking about the loss. The loss is operating, right? What do we have to do to that loss, right? So this is the one exercise video we did putting together the operating expense. Again, the information that we used, this is key. You got to know this. And the only way to learn is to, memorize this, work on some problems. What I'm going to do in this video is I will walk through exercise 17-7B. Now, you don't need this demo video because we already did the lecture portion. We already saw how to put together the income statement, the statement of cash flows, specifically doing that the operating activity section using the indirect method. But since I spoil you guys, I will do it for you, meaning the B problem. Okay, so I have the B problems open. They are posted in Blackboard. Please have those available, whether you have them on your screen or whatnot. So they give us a bunch of information, right? First, they give us a comparative balance sheet. They give us the income statement. They give us some information, right? Hey, depreciation expense was $6,000. Okay, cool. They didn't give us that information in the income statement. They tell us about the dividends that they paid. They told us about equipment that they sold and purchased, right? And that's it, pretty much. Those are the only 4 things they give us, right? And then what they want us to do is to prepare the statement of cash flow using the indirect method. Super easy. And they want us to compute the free cash flow, which is extremely easy because we have a slide that gives us the calculation, right? So first thing I'm going to do is I'm going to go ahead and I'm going to list out all my current assets, current liabilities. Okay, specifically my non-cash current actually I'm going to do the whole thing. So I'm going to start off with 2017. Actually, let's do it this way. Okay, 2016, 2017. All right. So let's just look at cash, right? It was $18,000, and in 2016 it was $33,000. So what happened to our cash? Well, our cash went down. It went down by $15,000. So at the end of the day, once we finish this statement of cash flow, we're going to prove that our ending balance is $18,000 in cash. We're going to show that our cash decreased by $15,000, and we're going to show which one of those activities either provided or used cash. Okay? So I'm going to go back to the So we're going to do AR. And for AR, we have an ending balance of 25,000. We have a beginning balance of 14,000. Okay. So what's going on here? Well, our accounts receivable is increasing, right? So I'm going to say increase. The next thing we have is our inventory, which inventory was 45,000, and in 2016 it was 25,000. So our inventory obviously increased, right? How much did it increase by? Well, it increased by 20 grand. The next thing we have equipment. I'm not going to worry about equipment, right? Because they tell us the equipment that we bought, right? If you notice, actually, you know what? Let's put it in here. $70,000 in 2017. In 2016, it was $78,000, right? Well, what's the difference? Well, it decreased by 8 grand. Right? Does that mean that I bought $18,000 worth or $8,000 or sold $8,000 worth of equipment? No, it does not. Right? Because we know that when we get it off the books, we need to factor in what was the cost, how much did we get for it, was there a gain or loss on disposal. So what I'm doing is just kind of putting in the accounts. 27,000 and 24,000. So what happened to accumulated depreciation? Well, it increased, which we would expect accumulated depreciation to increase. Okay. Then we get down to the liabilities. So I'm going to look at accounts payable first. Accounts payable in 2017, final balance was 31,000. And the beginning balance was 43,000. So what happened here? Our accounts payable decreased by 12,000. Excuse me. So sorry. I'm just going to say taxes payable. But those are the income taxes payable, right? It's a liability nonetheless. So the income taxes payable, well, it ended up being 24,000 in 2017, but in 2016 it was 20,000, right? So it increased by $4,000. So I'm taking the difference, 4 grand. Yep, I'm going to note that's an increase. Okay. Sorry about that. Okay. Next we have bonds payable. Bonds payable, it looks like is 20 grand now. But at the beginning of the year or at the end of 2016, it was 10,000. So we have a $10,000 increase. Okay. Then we have common stock. Looks like we ended 2017 with 25,000 and we ended 2016 with 25,000. Okay. And then retained earnings, they tell us that we ended 2017 with 31,000 and we began 2017 with 28,000. So there's a difference there. 3 grand. And that was an increase. Okay. All right. So now what we need to do, bear with me here. Okay. So now what we need to do is go ahead and put together the statement of cash flow. Okay. I'm going to come down here and do it. Actually, no, come over here. All right. So please, I am taking, or we are taking the time to demonstrate how to properly set this up. Do this for your homework, okay? So, first thing I'm going to do is I'm just selecting an arbitrary amount of rows, right? What do I got here? 1, 2, 3, 6. Perfect, okay? I'm going to merge and center these. I'm going to click and drag down 3. Okay, so what am I doing here? Well, first thing I'm doing is I'm putting the company name in. This should be Rocastle Company. So I'm going to type that in. We are doing the statement of cash flow. Remember, this covers a period of time, so it's for year ended December 31, 2017. Okay? Then, notice I'm at the end of, so I have these 6 rows, right? I'm going to take the last 2 that are in here, and I'm going to put in my commas. Please get rid of the decimals. You don't need them. Okay? And then what I'm going to do is I'm going to take the first 4 rows, merge and center, left align, click, and drag them down. Again, I just want an arbitrary amount of rows underneath just so we have enough room. Okay? So the first thing we need to have must be completely left aligned. Cash flow from operating activities. Okay, boom. Then we start off with net income. So indent 1, net income. Okay, I'm going to go all the way over, right? I'm within my, let me do this here. Make it easier for you to see, hopefully. Okay, there we go. So I'm coming all the way over to the end of my report and I'm typing in my net income. And if I look at the problem, they tell us the net income was 28 grand. Cool. No problem. 28,000. Okay. Sorry. My mouse is a little touchy here. Okay. So then what I'm going to do is I'm going to indent twice. And I'm going to say, I'm making adjustments to reconcile net income to net cash provided by operating activities. Adjustments to reconcile net income to net cash provided by operating activities. Okay. And don't do that. Okay, and I'm going to wrap this text down a little bit. There we go. Okay, so what's the first thing I need to do? Well, maybe if I were you, I'd probably have this on a note card, right? These steps, okay? I know them, so I'm just going to rattle them off. First thing I need to do is now I'm going to indent 3 times. Okay, and we're going to add back our depreciation expense. Okay, notice I'm coming to the middle column. I'm not going all the way to the left. The problem tells us our depreciation is 6 grand. Okay, so then I'm going to indent. Okay, so the next thing we have is I'm going to put them in. Or the next thing we need to do is we don't have any gains or losses, right? The problem tells us in the problem, bear with me here, during the year sold 12,000. The equipment cost 15,000. Accumulated depreciation of 3. So we don't have a loss, right? So we can automatically calculate, and I'm reading number 3. It says during the year the equipment was sold for 12 grand cash. Cool. The equipment had a cost of $15,000. Okay, that's awesome. Had accumulated depreciation of $3,000 at the time of the sale. So that means the book value is $12,000. Guess what? That's the same amount of cash we got, no gain or loss. So we don't need to add back any increases or decreases, we don't need to deduct any gains or add back any losses, right? Okay, so the next thing we need to do is analyze our current assets, current liabilities, okay? Now, first thing we have here, and I'm going to go in order. In a perfect world, we'd probably list these in ascending order, meaning based on how much each of them is, right? So the first thing that we need to do, and I'm just going to do them in order. First thing we need to do is show that we have an increase of $11,000 in accounts receivable. So 1, 2, 3, 4. I indented 4, and I'm going to say increase. Oh, it's too much. Increase in AR. Right? So what happened to our accounts receivable? It increased by $11,000. It is a current asset. The current asset increased. That means I need to subtract it from my net income. So I'm going to subtract out the $11,000. Okay? So the next thing we have is inventory. Okay? So what happened to our inventory? Well, our inventory increased by $20,000. Increase in inventory was $20,000. So we know when a current asset increases, we need to subtract it. Okay? Why? Well, because remember, the income statement was based on the accrual method, right? When do we recognize those expenses? Whenever we sell that inventory. We're not doing accrual, we're doing the cash basis. We want to know how much cash did we spend on inventory. Well, based on the fact that it went up by $20,000, the difference increased in $20,000, that must mean that we have to increase $20,000 of our net income to get back to that cash basis, right? Okay, equipment. Well, remember, equipment does not belong under operating activities, okay? Accumulated depreciation does not belong under operating activities, right? We're going to look at our liabilities. Okay, let's look at accounts payable. Okay, so what happened to our accounts payable? Our accounts payable decreased. Decrease in AP. Okay, how much did accounts payable decrease by? Well, it decreased by $12,000. Okay, so what do? If our accounts payable is going down, what's happening? Well, we're using cash to pay our accounts payable, right? So I'm going to subtract out that $12,000. Okay. Next, we have taxes payable. So what is the impact of taxes? Well, we see that from within the year of 2017, it actually increased. So we have an increase in taxes payable. Okay, so if we have an increase in a payable, what does that mean for us? Well, that means that we accrued the expense, but we didn't pay the expense. We still have that cash, right? So from net income, we subtracted our $4,000 to end up with net income of $28,000, but we're trying to get back to the cash basis, so we need to add back that $4,000. Okay? Oh, sorry. So then what I'm going to do is I'm going to put in my bottom border. and I'm going to auto sum these. I want to see what's the net cash. Ooh, it's $33,000, okay, in the negative. So my operating activities actually used cash instead of generated cash. So I'm going to take my net income and I'm going to add in my negative. I get negative $5,000. So I'm going to go in, let's see, 1, 2, 3, going 4. This is net cash used by operating activities. Okay, perfect. Go ahead and skip a space. Now, what's the next section? Well, the next section is cash flow from investing activities. Okay. Now, I'm going to increase. Let's see, go. Okay. So now I need to figure out, okay, well, how much plant assets did I buy, right? How much plant assets did I buy? How much did I sell, right? Well, that doesn't help me out. Make it a reddish color. Doesn't help me out at all. $8,000 decrease, right? Does not help me. I need to go back and I need to say, okay, what did the problem tell me? Well, the problem number 3 said during the year you sold equipment for $12,000, and number 4 says you bought equipment for $7,000. Okay, cool. I just need to make that happen, right? So what I'm going to do is I'm going to come over here and I'm going to say sell of plant assets. All I want to know, how much cash did I get for selling this? $12,000. Okay. If there was a gain or loss, there is not in this example, but if there were, I would first need to identify what is the amount of the loss or the gain. Problem's going to tell you. You had a gain of $3,000 or you had a loss of $3,000. Okay. That gain or loss is going to go up in our operating section. We don't have a loss, so we can just forget about it, okay? And then the next one we have is they told us that we purchased equipment. And they told us that we purchased equipment for $7,000. Well, that would have that's an outflow of cash, right? If we purchase something. So we need to figure out now, on average, or not on average, what's the net of cash flow from investing activities? Well, I get $5,000. Okay, $5,000 is actually, bear with me here. I'll put it down here. Okay, and this is the net cash provided by investing activities. Okay, skip a space. Sorry. Okay, we're going to skip a space, and now we're going to list our cash flow from financing activities. And we can go back and look and say, we issued bonds, $10,000, right? Did we issue any common stock? Nope. Did we pay dividends? Yep, sure did. It's not on here. Where's it at? Well, the problem tells us. Tell us somewhere. Bear with me here. I know it's here. I just need to find it. Number 2, dividends. $25,000 were declared and paid. No, I read it somewhere. Okay, so we need to put that in here, right? So what we're going to do is we're going to say issuance of bonds, $10,000, which is a inflow. And then we're going to say payment of cash dividends, which was $25,000. Okay. We're going to take the net of these two numbers. And we see that we have a loss of $15,000. Okay. What is this right here? This is the net cash used, because it's negative, by financing activities. Okay. So now we need to figure out, based on all three of these activities, operating, investing, and financing, what is the net change, right? And that's pretty easy for us to do. We're going to sum up the net cash used or provided by operating activities plus the net cash used or provided by investing activities plus the net cash used or provided by financing activities. We end up with negative $15,000. Guess what this is? This right here is going to be our net decrease in cash. Okay, show you something cool. I already knew cash was decreasing by $15,000, right? Because I already calculated from the get-go, right? Started off with $33,000, ended 2017 with $18,000. So I knew that was going to be there, right? Now I need to take my cash at the beginning of the period, which they tell me is $18,000. Or I'm sorry, $33,000. Okay. So I now can figure out what is the cash at the end of the period. Well, negative 15 and 33 gives me $18,000. Put in your double bottom border, please. Guess what? To make sure I did this right, I'm going to take this cash at the end of the period, $18,000, compare it to my balance sheet. Of $18,000, I am correct. This is right. I did everything correctly. Okay. If I didn't get if the cash at the end of the period from my statement of cash flow did not match my balance sheet, I did something wrong. Okay. So now we need to figure out what is our free cash flow. Well, it's easy. First thing I need to start off with is net income. I need to subtract purchases of equipment. Purchases of P, and E. And then I need to subtract out my dividend payments. So I'm going to start off with my negative $5,000. I'm going to subtract out my $7,000. I'm going to subtract out my $25,000. And if my math is correct, I should have free cash flow in the negative of $37,000. Okay? Now, let's look at our income or statement of cash flow for a second. Would you say this is a strong company? Right off the bat, I would say absolutely not. Why? Well, first of all, they're losing money on their operations. That's not a good sign, right? Where are they getting cash flow from, right? Their operations is actually, their operation is reporting a net cash flow usage, right? But look at their cash flow from investing activities. That is, net cash is being provided by investing activities. That's not good, right? If you have to sell off assets to get cash, you got problems, okay? So, in the real world, you will see this cash flow from investing activities in the negative. That's perfectly fine, okay? That doesn't signal there's something wrong with the company. In fact, I would argue that signals there's something good with the company because they're investing in property, plant, equipment, right? To hopefully use that to generate revenue from operations, okay? Because we're going to take that PP&E, put it into operation, and hopefully generate positive net cash flow from operating activities, okay? So that, my friends, is demo problem 17-7B, which should help you out with your 17-7A homework, okay? And to be honest, if you didn't have this demo, you'd still be able to do your homework problem because all the little demo videos that we did in between and the lecture videos. But if you have any problems, please feel free to reach out and text me. Reach out to me anyway, text me, email me, whatever. Be more than happy to discuss any questions you might have. Okay? So thanks for tuning in, and we'll see you next week.